Welcome students. Today we will understand the concept of depository system in detail. An effective and fully developed depository system is essential for maintaining and enhancing the efficiency of a mature capital market. So, we need to understand this depository system in order to understand capital markets. Before introduction of depository system, the problem faced by investors and corporates in handling large volume of paper were as follows. There were bad deliveries, fake certificates, loss of certificates in transit, mutilation of certificates, delays in transfers, long settlement cycles, mismatch of signatures, delay in refund and remission of dividend. We need to understand some history about the depository system. So it was first set up way back in 1947 in Germany. In India, it is a relatively new concept that is introduced in 1996 with the enactment of Depository Act 1996. Their operations are carried out in accordance with regulations made by SEBI, bylaws and rules of Depository Act and SEBI Depository and Participants Regulation Act 1996. We need to understand what does it mean. The term depository means a place where deposit of money, securities, properties, etc. is deposited for safekeeping under the terms of depository agreement. A depository is an organization which assists in the allotment and transfer of securities and securities lending. The shares here are held in form of electronic accounts, dematerialized form, and depository system revolves around the concept of paperless or scriptless trading. It holds the securities of the investors in the form of electronic book entries, avoiding risk associated with paper. It is not mandatory and is left to the investor to decide. Depositories carry out its operations through various functionaries, that is called business partners. Now we need to understand the legal framework of a depository. A depository system is governed by the following acts. First one is SEBI, that is Securities and Exchange Board of India Act 1992. SEBI Depository and Participants Regulation 1996. Bylaws of Depository, Business Rules of Depository and the Companies Act 1956. There are certain depositories that are available in India. Presently, there are two depositories working in India. First one is Nsdl, that is National Securities Depository Limited. First one is National Securities Depository Limited. It was registered by SEBI on 7th June 1996 as India's first depository to facilitate trading and settlement of securities in the demat form. It prompted by IDBI, UTI, NSE, Second is Central Depository Service India, that is CSDL. It commenced its operations during February 1999 and was prompted by Stock Exchange Mumbai in association with BOB, that is Bank of Baroda of India, SEBI and HDFC Bank. At present, 10 stock exchanges are connected to the depositories. These are NSE, the SC of Mumbai, Stock Exchange of Mumbai, Calcutta Stock Exchange, Delhi Stock Exchange, Ludhiana, Bangalore Stock Exchange, Over the Counter Exchange of India, Madras Stock Exchange, Interconnected Stock Exchange, and Ahmedabad Stock Exchange. Market trade. Market trade done settled through a stock exchange and a clearing corporation. Of market trades, these trades done privately without involvement of stockbrokers and stock exchanges. Again, investor may either choose to invest privately or through a stockbroker depository participant. Constituents of depository system. What are the constituents? These are depository participant, securities issuer and registrars and share transfer agents, stock exchanges and brokers, clearing corporation, clearing house, clearing members, banking system and investors. These are the constituents of the depository system. Depository. It is an organization where the securities are held in electronic form and carries out the securities transaction by a book entry. DP. Depository participant, is an agent of depository and functions as the interacting medium between the depository and the investor. He should be registered with the SEBI. Must possess the requisite qualification, that is depository participants must have, by the concerned depository which he is a participant. Depository participant is responsible for maintaining the investor securities account with the depository and handles them as per the investor's written instructions. He is linked to a broker who trades on behalf of investors. To avail their services, an account similar to bank account has to be opened with the DP, that is depository participant. As per SEBI's regulation, financial institutions, bank, custodians, stockbrokers, etc. can become depository participant. However, investor may choose depository participant of their choice and also deal with one or more depository participant at a time. Securities issuers and registrars and share transfer agents. For example, an agreement between depository, issuer security and the designated registrar share transfer agents for underlying security in the case of issues like transfer of securities by their beneficial owners. Now we need to understand what are the stockbrokers, what are the stock exchanges. Stock exchange is an organized market for dealings in securities. It is commonly referred as a secondary market. One of its main function is price discovery. Is that to cause prices to reflect currently available information about the security. Stockbrokers are the members of stock exchange. They are primarily engaged in two main activities: buying and selling of securities for their clients, charging a common commission, and as a dealers or traders, and dealers they buy and sell on their own account for trading gains. Clearing corporation, clearing house, and clearing members. Who they are? We need to understand. A clearing corporation is a central organization that is created to facilitate efficient, fast, economical settlement of transactions at a stock exchange. It being an internal department of a stock exchange is an independent entity. The members of clearing corporation, brokerage firms, banks, and other financial institutions who are called as clearing members. Here is an example. All trades done at NSE and OTCEI are settled through National Securities Clearing Corporation. It acts as a central mechanism for consolidating and settling transactions instead of member firms setting each trade individually amongst themselves. Banking system. A depository essentially play a dual role. Is that of depository and a limited bank. It maintains current accounts for participants and executes fund transactions related to securities transactions for participants. Investors. Who they are? They are individuals or corporates who have acquired shares either in primary market or in secondary market. So it is not necessary they are acquiring the funds or they are acquiring the shares in secondary market only. They could be from either primary market or secondary market. Facilities offered by depository system. So it's important to know there are certain facilities that are being provided to the investors. They can opening of depository system, dematerialization, rematerialization, settlement of trades in dematerialized securities, account transfer, transmission, and transposition, pledge, hypothecation, redemption or repurchase, stock lending and borrowing, corporate action, account freezing, nomination, demat of debt instruments, dealing in government securities. Opening of depository system. SEBI has made compulsory trading of shares of all the companies listed in stock exchanges in demat form. With reference 2nd January 2002, it is effective. Hence, if the investor wants to trade in respect of companies which have established connectivity with Nsdl and CSDL, he may have to open a beneficiary account. Beneficiary account is an account that is opened by the investor or a broker with a depository participant of his choice to hold shares in demat form and undertake scripless trading. For opening a demat account, the following documents are required. Demat opening form duly filled, address proof, photograph. Once demat account is opened, investor must sign an agreement with depository participant and the investors will be allotted an account number called client identity. No minimum balance is required. Investors is provided with a transaction settlement by his depository participant at regular intervals based on which the investor will know his security balances. Dematerialization. It means conversion of physical certificates into dematerialized holdings at the request of the investors. Only shares registered in the name of account holder are accepted for dematerialization at the depository. Procedure. What is the procedure of it? First, we need to open a demat account or a security account with any depository participant of investor's choice. We need to obtain account number from depository participant. Dematerialization required form, that is DRF, to be submitted to the DP who intimates depository of the request. DP then submits the certificate along with the DRF to the registrar who confirms the demat request. Registrar validates the request, updates the records, destroys these certificates and informs depository who in turn credit the DP account. Depository participants updates the investor's account and inform the investor. Once the company is admitted into depository system, an ISIN, that is International Securities Identification Number, is allotted by the depository. This number is unique for each security of the company that is admitted in the depository. The entire process takes about 15 days time. However, when a large number of certificates are submitted from institution, it takes up to 30 days for demat. An investor may demat a part of his demat holdings and hold the balance in physical mode for the same security. Demat shares are fungible because they do not have any distinctive or certificate number. Rematerialization. It means conversion of demat holdings back into certificate. If an investor wishes to get the securities in physical form, all he has to do is to request DP for remat. Procedure. What's a procedure for rematerialization? Investors must fill up a remat request form that is known as RRF. That is remat request form, RRF. The DP will forward the request to the depository after verification that the shareholder has the necessary balances. Depository will in turn intimate the registrar, RTA, registrar and transfer agent will print the certificate and dispatch the same to the investor. Settlement of trades in dematerialized securities. The following stock exchanges have been admitted on the depository to conduct this activity: NSE Stock Exchange, Mumbai, Calcutta, Delhi, Ludhiana, Bangalore, Madras, Ahmedabad. These are stock exchanges that are connected. Over-the-counter exchange of India and interconnected stock exchange is also there. Account transfer. Depository gives effect to all the transfers resulting from the settlement of trades and other transactions that take place between various beneficial owners. Buying of securities. It is similar to buying of physical securities. What's a procedure? Investor purchase securities in any of the stock exchange connected to depository through a broker. Investor pays to the broker. Broker pays clearing corporation. On the pay out day, broker receive credit of securities. He gives instructions to depository participant to debit clearing account and credit client's account. Investor receives shares into his account. Investor has to make sure that broker transfer the securities into his account before the book closure, or else the company may have corporate benefits to the broker. Selling of securities. The procedure to sell the security is: investors sell securities in any stock exchange linked to depository through a broker. Investor gives instruction to depository participant to debit his account and credit broker's account. Before the pay in day, investor broker transfers the securities to clearing corporation. Broker receive payment from stock exchange. Investor receive payment from broker. Sale in demat form is similar to sale under physical mode. Transfer. Depository being electronically linked to DP's issuer company and registrar and transfer agent and clearing corporation of the stock exchange serve as an integrated setup for maintenance of investor's account. Hence, here the transfer of securities occur merely by passing book entries in the records of the depository as and when instructed by the beneficial owners. Transmission. The claimant will have to fill the TRF, that is transmission request form, supported by the documents like death certificate, succession certificate, etc. The DP, after verification that the application is genuine, will transfer the securities to demat account of the claimant. Demat transfer of all formalities can be completed in one go. Transposition. The security certificate for this purpose must be submitted along with TRF to the DP. Pledge and hypothecation. Depository allows the security placed with them to be used as a collateral to secure loans and other credits. Pledging demat securities is easier and advantageous than pledging physical securities. Procedure. Borrower or a pledger and a lender pledgee must have depository accounts. Details of securities to be pledged should be submitted by pledger to his DP in a standard format. Pledger should confirm the request through his DP. Once this is done, securities are pledged. Then the financial transactions between pledger and pledgee are handled outside the depository system. After the loan is repaid, the borrower can request foreclosure of pledge by instructing his DP. If pledgee agrees, the investor may change in securities offered in a pledge. Redemption or repurchase. This occurs when the securities are surrendered to the issuer either on maturity or in pursuance of an option given by the issuer in lieu of agreed consideration. The consideration may be in cash or new securities in lieu of existing securities. Procedure. RRF repurchase request form is used instead of remit RF. Client must be paid in cash or new securities in lieu of existing securities. Stock lending and borrowing. It involves lending and borrowing of securities under an approval scheme. It is executed through approved intermediaries duly registered with SEBI under the Securities Lending Act 1997. Intermediaries must deal in depository system only through a special account number as intermediary account opened with a participant. Nomination. Like shares in physical form, shares in electronic form can be nominated. Nomination can be made only by individuals holding beneficiary account. Minor can nominate only through guardian. It can be made in demat account wise and not security account wise. Demat of debt instrument. Demat instruments can be held in demat form. Instruments like bonds, debentures, commercial papers, certificates of deposits. From October 31st, 2001, RBI has mentioned that banks and financial institutions shall make investment in debt and bonds only in demat form. Investors need not to open a separate demat account for demat of debt or instruments. Procedure of demat of debt instrument is same as that of equity shares. Investor has to ensure that before the certificates are handed over to the depository participant for demat, he marks surrendered for dematerialization on the face of the certificates. Dealing in government securities. As we know, government securities are most safer stocks, and we know government securities as gilt-edged securities. While we deal in government securities, a subscriber to government securities who opt for Nsdl securities may open an Nsdl account with RBI or any other approved entity of his own account and held in Nsdl1 account, and investments held on account of the other clients are held in Nsdl2 account. Safety features in depository. To ensure the safety to the investors, in following measures are existing. Depository participant cannot affect any debit or credit in the demat account of the investors. The valid authorization of the investor is required. Regular reconciliation between DP and depository. Periodic inspection by depositories of Office of DP and Registrar RTA. All investors have right to receive their statement of account periodically from the depository participant. If depository goes bankrupt, the creditors of the depository will have no access to holdings in the name of clients of the DP. Such investors may, however, transfer their holdings to another depository participant. Compulsory internal audit of operations of depository participant by practicing chartered accountant every quarter. Steps to be taken for safekeeping and backup of the securities and data at all levels. There are certain benefits of depository system to the nation as well. They are growing and are providing more liquidity in the markets, increase in competitiveness in international marketplace. They are attracting many investors, improved prospectus for privatization of public sector units by creating conducive environment, considerable reduction in delay, minimizes settlement risk and fraud, resorting investors' faith in the capital markets. To the investing publics, there are certain benefits. They are available for the investing public. There is a reduction of risk, association with losses, mutilation, theft, forgery, and physical scrip. Elimination of financial losses from loss of physical scrip. There is a greater liquidity from speedier settlements, reduction in delays in registration, faster receipt of corporate benefits, reduction transaction cost through greater efficiency to the issuer. There are certain benefits that are being available to the issuer. There is up-to-date knowledge of shareholders' names and addresses, reduction in printing and distribution costs of new issues, easy transfers of corporate benefits, improved ability to attract international investors without having incorrect expenditure of issuance in overseas markets. With this, I would like to thank all of you. Thank you, students. Happy learning.